Hey everybody, Boris last week, BK Forex. Welcome to the weekly technicals for the calm dollars for Aussie dollar, dollar CAD, Kiwi dollar, March 19th and March 23rd, 2018. And if anything, this week has really taught us that the calm dollars are getting very badly compressed as U.S. yields and expectations of U.S. rate hikes begin to go higher. It's really been a pre-FOMC rout in the calm dollars with Aussie, Kiwi getting slaughtered, and dollar CAD breaking very, very key 130 level on Thursday to really signal much bigger problems ahead. This isn't really, this dollar CAD story is idiosyncratic to NAFTA, tariffs, slowing down growth in the Canadian economy, and yes, interest rate differentials between the Bank of Canada and the Fed, but almost more exaggeratedly so than the Aussie and Kiwi, which are essentially standing still. The story with Aussie Kiwi is they're basically standing still while the dollar is moving forward, at least on the yield rates, and finally the market is catching on to this. So we saw very, very big turns in both the Aussie and the Kiwi, which suggest even a further waterfall this week if the same theme begins to continues as we go through the week. So resistance now, the levels in Aussie dollar now are 79.76, and honestly, I would say probably 78 is probably as high as it's going to get up to on any kind of a counter trend rally. Dollar CAD certainly broke out very, very strongly, but it does have very significant technical resistance to 132, although that could go by the wayside if the market feels that there is a lot more to the Fed action in the next couple of months. And the Kiwi basically following the same path, just in a more compressed, lower volatility case as the Aussie. The calendar this week brings us a couple of interesting things on the calm down land. We have, of course, on Wednesday, after the FOMC, we have the Australian employment data, which should be very interesting, and we have the Kiwi rate decision. Now, of course, the Kiwi rate decision is going to be the same. What is fascinating, though, from just a purely FX point of view, this is going to be, if the Fed raises, as everybody expects they will raise, if the Fed raises to 175, we will then now have the same rate as New Zealand, which has been the highest rate in the industrialized world for quite a long time, really since almost the beginning of the global financial crisis. So this could be a seminal event just simply from that point of view, that U.S. rates catch up to New Zealand rates, the whole interest rate compression between the high yield carries of Kiwi and Aussie disappears completely. And that is perhaps what the market is certainly starting to front run this week, with potentially a lot of continuation next week. Australian employment, we have no view on the Australian employment because there's mixed picture. Services were a little weaker, but manufacturing saw a strong increase. Still, I think the numbers in Australia could be at very best mediocre on the employment front, which is just only going to confirm the idea that RBA is going to stay stationary pretty much through 2018. This is really the story here. The market is seeing that both RBA and RBNZ are staying stationary through 2018, while the Fed slowly, surely, but steadily continues to increase rates throughout the year. And as that gap widens and widens and widens, it obviously presses like a 1,000-pound weight onto Kiwi and in Aussie, and that's why you're seeing the decline there. And then end of the week, we do have some Canadian data, which could be of interest because Canadian data has been weak, and the weakness in Canadian data, combined with all of the chaos and drama involving the trade negotiations, has really, really turned dollar CAD into a one-way trade to the upside. And this could only add, putting salt in a wound, could just add to the woes if we get bearish Canadian data. If retail sales and CPI all come in weaker than expected, that really leaves the BOC potentially in the same space as RBA and RBNZ, that is stationary for the rest of 2018, and then makes a dollar a runaway trade in dollar CAD. So looking at the charts here, let's start with dollar CAD because I think it's certainly the most dramatic move here. Look at the weeklies. Look at this monster weekly move. It's more than almost 300-point move on the weekly, ending on the close, on the highs of the week, right at 31. And really the only thing that's stopping this move, technically, is this 31-32 corridor, which was former support, could be current resistance. Fundamentally, if you have strong, unambiguously hawkish Fed message, a rate hike, it's possible for us not to just go through 32s, but to bust and perhaps even go 32.50s before we find any kind of a topping formation. So dollar CAD looks still weak and still possible for further appreciation, although the amount of appreciation I think is going to be a lot less this week than it was last week, which was truly a bust out week for the pair. Aussie, the flip side. Look at this flip candle. We're ending on the lows into the close with 77.10 now on the close. We're breaking, actually broke the lows here. I believe. Let me see what the lows are here. Yeah, we broke the prior two weekly candle lows, not by much, but enough. So of course the 77 becomes a key battleground next week, but ultimately we really could see 76 as a move in the trade. This was a very, very negative candle. It's sort of a bearish engulfing candle. We tested the highs and came back down, took out the lows. Those type of technical formations are so uber bearish that you really can feel a lot of confidence in trading with a flow to the downside here. It would be very surprising for this whole thing to reverse completely, and it would mean that essentially something surprising and utterly unexpected happens on the Fed front and the dollar front to completely reverse market expectations. For now, by far the easiest trade is to short the Aussie into perhaps the 76s as the week continues. And Kiwi dollar, same kind of a thing, just simply a little bit lower volatility, and it is managed to hold just above the 72 level for the time being, but it can and it may break it, especially if RBNZ is essentially non-active for a long time to come. If they basically communicate they're not going to do anything. In fact, the 1-2 punch of hawkish Fed, dovish RBNZ could see 71 by end of Wednesday, beginning Thursday to you guys as we continue. So both of the calm dollars look like easy pickings for at least a small continuation sell into the front of the week. And even dollar CAD, despite the fact that it is really extended substantially, still has a little bit of room to go before I think it finally encounters any kind of resistance on a technical basis. That's how the week shapes up for the calm dollars. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.